In this episode, we're talking with Martin North from Digital Finance Analytics, and we're going to explore how the UK property market compares to our own. What drives the UK property market? What are the key similarities and differences, and what, if anything, can we learn from our mother country? Welcome to The Elephant in the Room. This is the podcast where we love to talk about the big things in property that never usually get talked about. I'm Veronica Morgan, real estate agent, buyer's agent and buyer's agent mentor, co-host of Foxtel's Location Australia, author of Auction Ready and co-host of Your First Home Buyer Guide.
And I'm Chris Bates, mortgage broker, recently ranked number 5 in Australia out of over 18,000 brokers in the annual MPA Top 100 Mortgage Broker Awards. Before we get started, I need to let you know that nothing we say here can be taken as personal advice. We always recommend you engage the services of an appropriate and experienced professional.
Our guest today is Martin North, and for those of you who don't know Martin, he is the founder of Digital Finance Analytics, a boutique research, analysis, consulting firm who specialises in offering insight into the dynamics of the mortgage, lending, savings, payments and superannuation sectors. He also curates the YouTube channel Walk the World, where he covers finance and property news with a distinctly Australian flavour and more than a few controversial guests. And since moving back to the UK, Martin, is it 18 months ago now or less?
Yeah.
It's 18 months ago. There you go. Got that right. He's been running his consumer research in both countries, and we're keen to explore what this has revealed about the two markets. So thanks so much for joining us today, Martin. Always great to catch up.
Yeah, really good to be back on. And it's interesting, because I've been running now the same methodology as I used in Australia from 2001 onwards, still running in Australia, but now in the UK for the last year plus. And boy, it's fascinating how the two markets are in many ways very similar, but also there are some really quite stark contrasts. And actually, I think we can learn quite a lot about Australian property from what we're seeing as you make comparisons between the two.
Well, it's fascinating because it's quite difficult because a lot of people look at the Australian property market as so unique, and it is unique, and it's really difficult to sort of discuss other countries in this context. But now you're in a box seat here, aren't you? You really can.
Well, I've got the same structure and approach and the same methodology, the same, we talk to our households through our survey teams on an ongoing basis, and then we're doing the modelling in the same way. So we're taking out some of the, difficulty of trying to do that. I mean, there's some difficulties. So, for example, we have about 10 million households in Australia. We have about 25, 28 million in the UK. We have a different structure of postcodes. But all of those things we can handle. And we can get to the fundamental issues. So, look, the headlines are property is horribly expensive in both markets. We've had very high migration in both markets. We're not building enough property in both markets. So there's a supply-demand disequilibrium in both markets. And lending standards have been all over the place. And so we've got a lot of people in severe levels of debt. But we've also got a lot of people really keen to get into the property market. So, you can almost say it doesn't matter where you are, you've got the same story. But then as you come down the level, that's when it gets really interesting.
I mean, it's not a bit of a, just quickly to search, right? The UK, I don't want to talk too much about markets, but I do think it's an interesting time, right? That, Canada dropped interest rates just in the last few weeks. UK today have their interest rate decision, right? This is Thursday, the 1st of August. And, the UK inflation rate we went way higher than it did here, right? It went up to like over 11%, I think, in October 22, but it's crashed just as fast, right? 18 months or, let's say close to 2 years, it's at 2% now, right? And so do you think that, this is a good thing that Australians can build confidence that we're going to see a similar return to inflation? Or do you think that, the problems over there are different, or are they the same?
Well, there are some differences and similarities, but the most obvious one is that the Bank of England moved rates above 5%, well above 5%, whereas in Australia we had 4.35%. And so the question is the tightening sufficient in Australia to pull inflation back down? the data that came out yesterday was knocking around the 3.9% in Australia. And of course, the RBA makes a decision next week. In the UK, inflation at the top line is just a little around 2%. It's come down significantly. However, the Bank of England is still quite coy about this because they're still arguing that there are inflationary pressures below the waterline. So it's about a 50-50 way up as to whether they're going to cut rates this month or next month. But the expectation is in the UK, mortgage rates will continue to come down. Some of the fixed rates have come down already. One of the big differences was that the Bank of England reacted quicker than the RBA did, and they moved rates faster than the UK did. And this, of course, was also at the time post-COVID when the economy in the UK was struggling, and we also had Brexit. So that the fallout from leaving the Eurozone meant that the economic growth in the UK was a lot lower. And public debt in the UK is high, by the way. We've got 100% of GDP to debt in the UK, whereas in Australia it's lower. So there are some differences. But I think the big contrast here is with the RBA keeping those rates quite a lot lower and travelling that, quote, narrow path to try and make sure that the jobless rate doesn't rise too high. In the UK, though, the jobless rate's still quite low as well, and wages growth has actually been growing faster than inflation. So in real terms, households in the UK are now actually seeing their incomes rising relative to the inflationary pressures, 3, 4, 5% relative to 2% on inflation. In Australia, that's not true. In Australia, in real terms, most households' incomes are still going backwards. I see that in the surveys. So you can see here that the different settings of the central banks are having quite profound impacts on the dynamics of the economy. But the other interesting observation, look at house price growth. In the UK, over the last year, there's been almost no growth, a little bit, maybe 1%. In Australia, well, as you know, in some markets, it's going mad. Look at Perth, look at Western Australia. Okay, Melbourne's flat or falling and Hobart's falling. And the latest data that's just come out shows that in the other centres, prices are still rising. So that there's an interesting dynamic difference here in terms of price trajectory. And I suspect that's to do with the higher rates.
Right. I'm wondering also, what's the general culture over there in terms of appetite to invest in property? Because it's almost a national sport here. What is it like over there?
Yeah. So owner-occupiers, very, very aspirational, want to get into the market, want to own your own place. Very, very similar. But the investment market is quite different. So in Australia, roughly 1/3 of lending is for investment properties. Right? In the UK, it's 17%.
Right.
In Australia, there are significant tax breaks for investment properties. In the UK, a couple of years ago, they took pretty much all of those tax breaks away. So that means that a lot of property investors can't actually offset the costs of the investment property and can't do negative gearing and things like that. And so what that means is that the mix of property is quite different in terms of there is actually less mum and dad investor property ownership in the UK. There are still some, but I keep reading articles and I see it in my surveys of investors in the UK saying, well, the government's shifted the carpet to the point where it doesn't make any sense to actually go into the investment sector. So with the strong growth in stock markets and bonds, a lot of investors have switched out of property investment into other investment classes. So the appetite for investment property in the UK is a lot lower than in Australia. And as I say, the tax breaks are very, very different. So it's much less of an issue. Oh, and by the way, the banks are under much stricter controls in terms of their lending criteria, both for owner-occupier and also investment lending. So some years ago, the regulations only allowed a certain proportion of loan to incomes above 5 times. So there's been always a bit more of a cap on the leverage. But interestingly, and again in my surveys, if you look at southeastern UK around London, Greater London area, in that area, we're still seeing debt-to-income ratios of 10, 11 times, a bit like central Sydney. But if you go to the west or if you go to the north, then the debt-to-income ratios drop dramatically. And in fact, the values of property away from London are much, much lower. They've still been rising, but not as much. The other interesting observation is we've still got very high levels of second homes and Airbnb in the UK. And there are local attempts to restrict the number of Airbnb and the number of second homes, particularly around the coastal areas, particularly in southwest England, for example. And we're certainly seeing the situation where a lot of locals are completely priced out because of those second homes and the Airbnbs. So that's another factor, and that's pretty hot at the moment. Again, it's a big issue being discussed in the UK, as it is to an extent in Australia.
Yeah.
But it is an interesting contrast that the whole investment sector is just a lot smaller here in the UK compared with in Australia.
In terms of rental accommodation, though, I guess what's the proportion of owner-occupier versus rented, and is council housing a lot higher than here?
Yeah, there is more public sector, although there was a lot of that got sold off. There's been some social housing developments, and in fact, in some areas, there's been quite a lot of new development, including embedded social housing as part of new developments. So it's still rough, roughly it's a third, just like in Australia. A third of people own outright, a third of people with a mortgage, a third of people in the rental sector. But the point is, in the rental sector, there are a smaller proportion of those owned by your mum and dad investors relative to Australia. The other interesting observation is that the new government, the Labor government, got back just on the 4th of July with a significant landslide victory. Although they only got 1/3 of the votes, believe it or not, they actually had a massive landslide. So two-thirds of the seats. Now that's no PR and there's no mandatory voting in the UK.
Yeah.
And one of the things they've come out with immediately is to say, right, we need to start building. So they have decided that, and they've announced this, they're going to build 1.5 million homes over 5 years. 1.5 million. Now, and of course, in Australia, remember, Albo is 1.2 million over 5 years. But they have precisely the same issues with a lack of ability to build. So the number of new starts are significantly down. They are trying to shift some of the rules with regards to the green zones around towns. So they have a thing called green belt, which is protected. So it's meant to be country. And they're saying, well, actually, there's a lot of grey belt. So grey belt is where you've got things like, I don't know, garages that were on green belt. So they're trying to find areas where they can expand. But the other thing they've done is to actually tilt the playing field away from building in and around London, where, of course, the bulk of the population lives and where a bulk of the migration is, and try and actually build into many other places. So it's interesting that there's a really fascinating parallel here between Australia and the UK in terms of we need to build more. But they've got exactly the same issues. They haven't got the builders. The costs of new construction continue to rise dramatically, which means that the cost of new builds are the problem. The planning regulations are all over the place, and local authorities are up in arms because they don't necessarily have the capacity nor indeed the zoned land to build. So it'll be interesting to see whether it plays out any differently to Australia, where, of course, the expectation of 1.2 over 5 years it's unlikely to be achieved. I think it's probably true in the UK.
With the lending over there, Martin, I mean, my heart is kind of in that world, right? So, I mean, it was always around 4.5 times your income there. And one of the things that's holding Australia back is that even though it looks on the tin that we've got a lot of growth, that's also even with the handbrake on, right? And, our borrowing capacities have dropped from, 7.5, 7, 6.5 down to, say, 4.5, 5. And, that's something that, may revert back to those sort of higher borrowing capacities with rate cuts and APRA, et cetera. But in the UK, it seems like that 4.5 has sort of stayed there. I mean, I just quickly did a calculator out of curiosity and, it seems to be 5.5 times just at a quick bang. So are you saying that even though interest rates have gone up a lot, borrowing capacity at times as a multiple of income stayed pretty steady, if not even got up?
It has, yes. They haven't had the same huge break that you had in Australia with the lifting of the buffer, and then, of course, the 3%. And as rates went up, that strangled people. So the borrowing capacity is relatively similar to what it was. But like I said, that's because they'd actually tightened it earlier on. So they never had the regular 6, 7, 8 times, wherever you were. The other point is that home prices away from the southeast relative to income are still a lot easier. So if you buy up north, you can still get a property for £100,000 or less. So it's not so aggressively accelerated in terms of price growth. And in fact, in some areas, prices have fallen quite considerably. Again, there's a big north-south divide, or more precisely, a southeastern divide relative to the rest of the country. And so if you look up north, or if you look down in the southwest or in Wales, then those income multiples actually work. You can still buy somewhere to live. Now, still, people are struggling. So in my surveys, again, I measure stress, and mortgage stress is relatively high. It's not as high as in Australia. At the moment in Australia, about half of households with an owner-occupied mortgage are having cash flow pressures trying to manage their finances. They're still paying their mortgage, but they are wrestling with trying to balance those finances. One of the reasons why retail sales continue on a per capita basis to fall in Australia. In the UK, it's not quite as aggressive as that. We are seeing people still spending. The amount they're spending is still lower than it was because, of course, if you compare volume and value, the value of what you spend has gone up because of inflation, but the volume of what you're spending has gone down. That's true in both places. But it is interesting that the mortgage stress, although it is here in the UK, it's not quite so aggressive. So I think some of the lending standards and some of the ease of capacity that we had through that cycle in Australia, particularly, I have to say, I think through the conservative years, really has created a little bit of a traffic jam in Australia. And with rates, still relatively high and unlikely to come down anytime soon. So, 4.35% in Australia is the cash rate. I don't think the RBA will lift rates next week, but I don't think they're going to cut them. And I wouldn't be surprised to see that rates will stay roughly where they are until sometime into next year in Australia. So that pressure, and the analogy I use a little bit is people were thinking that this rate cycle was going to be a bit of a sprint, so it would go up, but then it would come down again. So people were hanging on with their fingertips. However, now it looks as though the rate cycle in Australia is going to hang around for a lot longer, which means that people are going to be struggling for a lot longer. In the UK, those cash flow pressures are already easing because income's stronger. The multiples weren't so aggressive initially. And that means, I think, that we are probably going to see a little bit more easing in the markets in terms of people coming in and getting those properties. The other factor just to bear in mind, migration. In Australia, we had 600,000, 150,000, depending on how you measure it, over the last year. Migration in the UK, 750,000. So relative to the population, pretty much, Australia has imported people at twice the rate of the UK. And I think that's another factor in all of this. So strong migration means strong demand for property through the rental sector and then probably in buying as well. In the UK, the number of people coming in the country is still very high relative to what's happened over the last 20 years, say. But it's nowhere near the proportion relative to the population that we have in Australia. So that's another difference.
With immigration in Australia, people typically, they sort of start off in, say, Sydney or Melbourne, right? And then they need to be here, one of the capital cities, for a number of years or a period of time before they then might move to a smaller capital or potentially regionally. That's sort of the typical flow, right? In the UK, though, because everything is closer for starters and there's lots more cities, does that pattern change? Is it different to here? Does it have a different impact?
Yeah, so one of the real interesting observations in terms of migration is that people tend to come from different ethnic backgrounds. And those ethnic backgrounds are quite widely distributed across the country. So, for example, in some northern towns, there are a lot of people from Pakistan and from India, and so people tend to go directly there. If you look down in some of those other like in and around Birmingham, there are very particular ethnic, if you like, strongholds. So one of the really interesting observations is that the ethnic diversity in the UK is quite strong, but it's geographically quite concentrated. So you see quite a lot of migration in London, where a lot of migrants do initially come. Again, they have the same issue. It's horribly expensive to find anywhere to live in London. And therefore, quite often, there's a little bit of a migration out from London. But then a lot of the jobs are in London. And the economic outcomes for households are much stronger in the southeast relative to other parts of the country. So there is a bit of a pull down in there. The other point I'd make is, and I see this in Australia too, quite a few of the migrants who are coming with quite large bank balances. So these are not just people looking for a better future. There are some of those. Yeah. But there are a lot of people who are making a decision about where they want to live, and they bring with them assets that allow them to buy quite quickly. Now, we see that in Australia. So some of the new migrants, perhaps expats returning or perhaps people coming from other countries, bring large amounts of cash with them, and they go directly into buying property. And sometimes what we're seeing, certainly in both of the surveys, is that they are actually able to outbid locals because they've just got more cash.
I mean, that's happening in Australia, right? I mean, the cash buyers and, what's your thoughts on the wealth transfer over in the UK? I mean, you've got things like inheritance tax, particularly on, larger estates. Are you seeing that same story play out there where they're wanting to pass it down earlier to generations to help them into the housing market and to avoid inheritance tax, but also to help them enter the market?
Well, there are very strict rules about what you can pass down. It's very difficult to pass down much wealth at all, and the inheritance tax really bites. So, once you get over, is it 450, 500,000 pounds potentially, anything above that, then inheritance tax bites, and that basically could mean as up to a third or maybe up to a half of the value disappears back to the government. So the inheritance tax story means that the bank of mum and dad, although it exists, it doesn't exist to the same extent as in Australia. So there are still people helping the next generation to buy, but the average bank of mum and dad support level in the UK is about 25 to 30,000 pounds or 60,000 Aussie dollars. In the UK, that's there, but in Australia, in my surveys, the average bank of mum and dad support level is now about 110,000 Aussie and rising. So it's much easier to hand money across in Australia because the tax rules and regs are different than in the UK. It's much stricter.
Martin, have you done any work on sort of modelling on what impact that is having on house prices in Australia?
Oh, it's having a huge impact.
Yeah.
So, basically my argument is that if you are a young family wanting to buy, the typical age you're now buying in Australia is mid-30s. It used to be mid-20s. So it's about 10. That varies a little bit where you look across the country. If you then say, well, okay, who is buying? About 60% of those people who are buying at the moment are only able to buy because of the use of the bank of mum and dad, one way or another, either by way of a cash handout or, a cash loan. It's always complicated because sometimes the parents say, well, we'll give you money, but pay it back when you can. Guess what? They often don't. Others will actually say, well, we won't give you cash, but we'll actually help service the mortgage.
Yeah.
So both of those are happening. And because of the strong price growth in the Australian market over the last few years, a lot of older households are feeling quite affluent. And of course, they're still spending. So if you look at the spending trends in Australia, it's fascinating. Younger households are spending a lot less in real terms because they don't have the money. But older people, particularly with no mortgage and no rent to pay, have been spending, well, like drunken sailors in some regard, And what that means is that there's more capacity then to help the next generation. So it's definitely having a lifting impact on property prices for those trying to get into the market. And interestingly, the other observation is that whilst some property investors in Australia are now looking to sell, so particularly in Melbourne, we're seeing this, where those tighter regulations have come in terms of actually what you have to do to make a property serviceable for rental. The net rental returns in Melbourne are even more reverse than they've been ever before. And so we're seeing quite a lot of property investors selling, but we're also seeing other property investors who are still buying property for investment purposes in Melbourne and elsewhere.
Yeah.
And interestingly, quite a few of them are older because they've had this equity growth in their existing property. So we are seeing this two-way street with regard to investment properties, people selling, people buying. And a lot of the investors who are buying precisely the same properties as first-time buyers are aspiring to buy. So what we're seeing there is a significant lift in the value of property in the sort of 800 to 1.5 million range.
I'm on a personal mission to help more people make better property decisions, and you can find out all about what I'm working on at veronicamorgan.com.au. There you will find resources for first home buyers, details about my buyer's agent mentoring program, information about my newest project, Preferential, proactive property management in Sydney, or if you're looking to buy your dream home or investment property in Sydney's inner west, eastern suburbs or lower North Shore, you can connect with my team at Good Deeds Property Buyers. And if you'd like a 30% discount plus free postage for my book Auction Ready, How to Buy Property at Auction Even Though You're Scared Shitless, and yes, I'm a potty mouth, use the code ELEPHANT at the checkout.
If you're looking to buy your first home, thinking of upgrading to a new home, or purchasing an investment property anywhere in Australia, we would love to carefully guide you through this journey and importantly get the finance right. Please reach out to myself and the team at flintgroup.au.
It's quite fascinating, isn't it? What I'm sort of astounded at is some of those systemic issues that we're experiencing here that you're also seeing in the UK. You know, the rental affordability, higher vacancy rates, and how that's playing around with a shortage of property. So the government's come out saying would you say 1.5 million in 5 years?
1.5 million, yes.
Right. So they've got a acute shortage of properties over there too. You mentioned Airbnb. I interviewed Carl Fitzgerald. I think the interview would be a couple of weeks back by the time we get this one to air, because he did a report on Airbnb and the impact in 13 different regional locations in Australia, which is quite interesting, his methodology and what he revealed there. So go back and listen to it if you haven't listened to it. And so that's clearly a contributor. The short-term rental is clearly a contributor to taking a certain amount of stock outside of the long-term rental market. Some locations more so than others, but he's also done work in, say, Parramatta in Sydney, for example, and showed that it's actually made quite an impact there as well. So is that one of the key problems? I mean, you've got more immigration compared to what would normally experience in both countries. But you don't have the same favourable tax situation for investors, so you can't blame and I still can't understand how investors can get blamed for stock shortages, but we seem to get blamed for everything at the moment. So, let's just, you've got a government that actually has invested in more social housing than ours has. I mean, why is there a shortage over there?
Well, I think if you look at Southwest England as a case study, in some of those smaller holiday centres, only about 1 in 10 properties are available for ordinary people to buy.
How has that changed, though, say, over the last decade?
Dramatically.
Right.
Dramatically over the last 20 years. So we've had a huge swing so that effectively most of the properties in these holiday areas now are short-term lets, mostly Airbnb holiday lets.
Right, yeah.
And what it means is that anybody who used to live in that area now has to move away. And in fact, there are horrible stories in southwestern England where the people who actually have to come and clean the Airbnbs, each week or whatever, have to travel in to do that because they can't afford to live in the area.
Yeah.
And what that basically means is that the local authorities are struggling with two dilemmas. They need tourism because it's predominantly the main source of income for those areas, particularly over the summer months. But they also recognise there's huge pressure on individuals who can't afford, so they're seeing a lot of people moving away, moving into London or where else. So it's a dramatic horrible situation, it means also, of course, that in the winter, there's almost nobody there.
Oh.
So a lot of the shops, if they exist at all, and a lot of shops have been closing in the last couple of years because of the recessionary. We had a pretty much recession in the UK recently, mild. That means that there's less trade being done in those areas too. So other than maybe ice cream shops and things like that, so it's really changed the character of many of those little locations that were previously a bit of a balance between people coming and staying over the summer versus locals who are still able to carry on a business there. So that's a big problem. Up to the north, it's actually even worse, because there, what's happening is that some of the traders find it quite difficult now to be able to find somewhere to live that they can afford to live. So that means that the capacity to have people go build is reducing because they can't find anywhere to live too. And again, it's a bit of the same. There's some Airbnb and there's some second homes, but not as so dramatic as down south, because of course the southwest of England in particular is highly attractive for people particularly from London, who've got big incomes and can pay top dollar for local properties down south.
So you're talking about sort of holiday, attractive destinations, as opposed to, because you also said that, some places in the north of England, you can still buy a house for £100,000.
Yep.
So it was actually interesting. Carl, in my interview with him, he pointed out something that I'd never thought of before. And he said that lack of public transport to these, areas where there's blessed with nice nature and physically attractive places to be. But the hallmark of the short-term rental market is that basically it's really attractive if you have to get there by car. And you can't actually get a train or other form of transport. And I just thought that was quite fascinating as well, because of course then you've already got pressure in terms of infrastructure, and everyone's relying on vehicles. And then if you live outside, if you live a long way, you can't do a commute via train, to work in there. You have to basically drive. So fuel costs go up. You know what I mean? The knock-on effect of that. And the other thing too that a lot of people sort of claim is going to make a difference to affordability is the introduction of an inheritance tax, and yet there is one there, although the threshold is still quite high. I guess if you think about it, we'll just say £500. Is it still 3 times the Australian dollar? So that means, is that an unimproved land value, or is that of the value of the property?
It's twice at the moment. So
Okay.
the exchange rate actually dropped. It's pretty much
Time to
50.
travel to the UK for us. But the existence of an inheritance tax, has that made it easier for people to get into the market, or has it had no difference?
Well, as I said before, there's less of the transference of equity down the generations. And the average age of somebody getting into the property market in the UK is about 5 years lower,
Right.
than in Australia. So,
But even that's interesting, isn't it? Because
it is.
they don't have the help of mum and dad, and yet
Yep.
the help of mum and dad inflates prices. It's fascinating, isn't it? Because it's a double whammy.
yeah, and just to be clear, whilst prices are elevated in the UK, they're not as elevated as in Australia. I mean, Australian prices have gone stupid, in my view.
But you've been saying that for years, Martin.
Well, I know, but look at the ratios.
I mean, when you go there, Martin, how does it? I've been coming on your show for 5 years, and there's lots of things that have surprised me over that 5 years, right? And surprised you and lots of people. And how do you reconcile like what's happening and what should happen, and and then the story that a lot of your listeners do sort of pick up on? And do you find yourself, are you saying the same things that you did 5 years ago, or do you feel like you've learned a lot, and that, a lot of your listeners are getting a different view? Or
Yeah, no, it's interesting. So I still run my 3 scenarios, and that basically says, look, it's very hard to know where prices will go, because you've got to assume, and I underestimated the government's ability to be able to continue to throw petrol on the fire. I'll be honest with you. I thought that through the COVID period, with the issue there and then with the rising interest rates, we would see prices begin to adjust down. But then, of course, we had massive migration. We had home builder, which of course has wrecked the building and construction sector, as well as put a lot of people's expectations way out.
Yeah.
We've had the recent interventions in terms of the need to build more property to, the 1.2 million, et cetera, et cetera. So, and I'm sure there'll be more. So the next obvious one is to reduce the APRA buffer, although APRA came out recently and said, well, we're not going to do it at the moment, risks are too accelerated, which of course then created the CEOs of the banks to say, well, maybe we should do 50-year mortgages, and that's the way to solve the problem. So
exactly. We'll get to 90 before you know it.
if I can't get you one way, I'll get you another way. So I am still of the view that there is a path potentially to higher prices in Australia still, particularly because of the continued high migration, because of the relatively generous lending rules, because of the bank of mum and dad and the equity that's there, and the high demand and the lack of supply. I'm also conscious that as interest rates stay higher for longer, there are more people getting caught with the cash flow pressures. And, all of the recent analysis, even from the RBA, is saying, well, we've got more people now with some difficulty. Even in their securitization data sets, they came out recently and said, we're seeing a bit more pressure than previous. Although it's not dramatic, we are seeing a bit more. And some of the default rates are rising in some areas. So there is a path where rates stay high, and that might actually put a brake on price growth, particularly in some areas. There's also the risk, if you get a Middle Eastern flare-up and suddenly oil prices dramatically rise, or China completely blows up because of what's happening there with property, there is also a downside risk. But my view has always been, it's those first two scenarios which are the most seriously to consider. But relative to long-term ratios, debt-to-income ratios and debt-to-GDP, we're still way overpriced. So is that a sort of something that's going to come back, or is it always going to be different? And that, I guess, is... when I started doing this in 2001 in Australia, when I started to see these ratios go off scale, as it were, I genuinely had the view that was unsustainable. Well, it's been more sustainable than I had expected. However, I have to tell you that it's still long-term unsustainable in my view, because of the fact that there are people who are being forced off the lorry, as it were, that they're not able to buy to get into the property market. So they're in the rental sector. Rentals was 7.3%, I think, last time out, growth in terms of the cost of renting. So the costs of somewhere to live for Australians is dramatically higher than I think it should be. It's high in the UK as well, by the way, and that's putting a lot of pressure on a lot of households too. But you've got to say that if you look at the debt-to-income ratios and the amount of debt we've got in Australia relative to most other countries, well, we hold the grand prize. And it's also worth looking at New Zealand, of course, because there rates were higher by 5%. Prices have started to come down quite significantly. They were down about 20% in some areas. And now affordability is starting to get more reasonable. And so we're starting to see some first-time buyers beginning to get back into the market as migration is dialed back. So I wonder whether New Zealand gives us a bit of a clue of what might be going to be happening in Australia in the next couple of years. But who knows? So, Chris, to answer you directly, I think there's a greater understanding now. Yeah, it's more nuanced, simply because of the fact that governments do not want to see property prices fall. And then the other factor, of course, is financial stability risk, right? If property prices did fall, that would put huge pressure on the financial system, particularly on the banks, because they got so much of their lending in Australia in the property sector. It's double what it is in the UK. So 60 to 70%, right?
Yeah.
And that basically says that if anything happens to property, then the banking system is at risk. That means they're going to do everything they possibly can to keep the banking system going for a bit longer. So that's another reason why my first scenario, where the path to higher prices continues, or the one where it goes sideways, are the two that I focus on more than the one of deep falls. But I still am concerned that overall, with the private debt that's there, which is much, much higher than it's ever been before, a lot of people are really struggling. And it goes back to the path of interest rates. If the RBA gets inflation down and cuts rates relatively soon, we'll probably just see the prices continue to rise. But if we get stuck in this inflation 3.5% to 4% not coming down, they either keep rates where they are or even lift them, then of course it's a different story.
Is there a danger though for the property bears out there just to be perma property bears, right? That they've been reading, I got myself stuck in these bubbles, maybe 10, 15 years ago, when I was an advisor and reading the certain publications that were perma bears basically. Of your listeners and your followers, you'll see that there's a cohort that are that, and they're, forever never going to enter the property market. Yep. Do you think that that's the right strategy for people, or do you think that people, and sometimes they've sunk costs, right? Haven't invested through other cycles, and to enter now, it's just, well, I could have bought then, I haven't, so I'm not going to buy now because prices are too expensive. So they almost just forever never invest, whether it's property or shares. So how do you feel about that type of person, and have you got any advice for them?
Yes. So, I have one-to-one conversations with people around their property aspirations. And I always say three things. The first is you cannot generalize about property. You have to go granular and you have to look at individual circumstances, individual properties. Secondly, just because property is expensive, that doesn't mean that it isn't necessarily still appropriate to buy if you can afford it, and if you've got the significant buffers to deal with the bumpy ride of affordability. Because the chances are that if you're buying somewhere to live rather than for investment purposes, then it quite makes sense over and, for example, living in a rental situation where you can't control what's happening to rents, or indeed if you want more certainty. So I think property is partly about certainty and about somewhere to live. The third point I'd say is that if you're an investor in property, you have to be much, 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 much more careful, because, again, through my one-to-ones, there are still people who've lost a lot of money buying bad investment property.
Oh, absolutely.
Even through the cycle.
Yeah.
So you can't generalize and say never buy, or do buy. You've got to do the work. But then you've got to say three other things. The first is ask yourself the counterfactual. What happens if prices don't rise? Because property is partly somewhere to live as well as an investment property. And if you get some capital growth, great. And, I've been very fortunate in Australia. I've made significant capital gains through buying and holding property and selling at the right point. So let's be clear, you can do that. The other point there is that people's circumstances can change. And what I find quite sad sometimes is that they never thought through the what ifs. What if I lose one of my incomes? Or, what if interest rates go up? So a lot of people got lured in to buying, for example, cheap, high-rise investment property that was always going to be a marginal bet at best. And I'm still seeing people losing money. I'm also seeing some renters absolutely frustrated with the rental sector, saying, I'm going to buy anything. I don't care what it is. I'm just going to buy it.
Oh, yeah, right? Absolutely.
And then you end up buying an owner-occupied property that's probably more a lemon than anything else.
Yeah.
And then you have to spend a lot of money trying to maintain it, and they find that it's really tough. So again, it's really, really important to do your homework. But I've never actually ever said, don't buy. I've always said, buy with caution. Make sure that you understand what you're getting into, and don't just go for that high level, well, it must be fine because everybody else is buying and probably never goes down, et cetera, because I can point even now to areas, in particular properties, that are lower in value than they were 5, 6, 7 years ago, even now.
Yep.
That do your work's the right call, right? Like, so that's where people don't want to do the work, and then they enter the property market and for the wrong reasons, and because they haven't thought through their decision, and and then you're right, the outcomes come because they haven't done the work, whether it's buying in a building with issues, or whether it's buying a high density apartment where there isn't growth because there's lots of supply coming, or whether it's buying on a busy road because they didn't want to go to lots of open homes. So I think you're right. The challenge is doing your work up front and buying a good asset. But do you find though that people, they don't want to go that deep in the knowledge? They just want the headline stuff, and they don't want to do the digging to figure it out. They just go, she'll be right, mate. I want to go back to clicking Netflix.
Well, I have to, I've said several times, I'm amazed that people spend less time researching property than going to buy a new fridge.
Yep.
They'll do a lot of Googling or whatever it is online and try and find and save you $20 off, right? But when it comes to property, it's almost like, the agent says it's great, so it must be great. It's fine, when the property only ever goes up. The number of people who I've had conversations with who never ever got a structural survey and just took at face value the very high level marketing survey that's provided as part of the deed structure for the sale. I find that incredible. So a number of people don't understand that actually those little Mickey Mouse surveys are part of the marketing strategy. They're not actually a proper structural survey of the property, and yet they rely on it and then turn around later and discover that it's not worth the paper it wasn't written on.
So is that in the UK that there's a little Mickey Mouse survey they get as a vendor disclosure? Are you talking about in the UK there?
I'm talking about Australia.
You're talking about Australia, where some agents will commission a building and pest inspection, and sometimes they're all right, but often they're not. And, it's always good to get independent. I'm astounded by the amount of people that buy strata property without getting a strata report or they don't read it. It's like the act of getting it is ticking the box as opposed to reading it and understanding what's in it, but also what's not in it. Yeah. And it does amaze me how cavalier some people are. I think what's interesting, though, I always remember our first interview, Martin, with you back in 2019, always, because you came on as the Perma Bear. We were like, right, we had our sleeves rolled up for a fight. And by the end of it, we were all in agreement. And that was a total surprise to me. And I love that because it's about rethinking. It's about being open to actually thinking about things differently. And so I think you are and we are. But as I was just sort of flicking through some of your videos and things in preparation for chatting with you today, I saw a post of yours from March 22nd or 21st, I think it was, in 2020. And it was like, I just went to my first auction, post the announcement of lockdowns. 3 people turned up, nobody bid. That's it. I'm calling a property crash now. And it made me laugh because I seriously saw it just today, and I thought, were you sitting there rubbing your hands together with glee to go, I was right, finally, we'll see 40% falls?
Well, like I say, there is, the raw economics. The raw economics says that property prices are way overvalued relative. Yeah. So in theory, if you will come back to long-term normal, it should be 40% lower, right? But then we said, continue to say, governments pulled out all of the stops, RBA cut rates to zero, et cetera, et cetera. And then we had another bubble. And, are we in a bubble or is it something more structural? I've always said it's not really a bubble. It's a structural variation. But then if you look at New Zealand, they went through a similar process and now look where they are. So, it's just worth bearing in. And I, of course, lived in the UK years ago and I went through 3 property crashes and I lost 30% of the value of my property in one of those crashes. So I'm a little bit attuned to understanding that property prices can go down and
you've experienced it. Yeah. So I have to ask you though, do you predict a UK housing crash?
At the moment, the view I've got is that we're going to, again, I still run those 3 scenarios, but I think the middle scenario of it, we're going to go slightly sideways, slightly up. The supply of new properties, if they put the 1.5 million in, that will actually have a little bit of a dampening effect on property price growth. I do expect property prices to continue to grow in southeastern UK around London because the demand there is much, much higher. Yeah. And the average price is already quite extended, but there's a lot of people who can afford to pay even more. So I would suggest that there's going to be more property price growth there. In other parts of the country, away from, it's more sideways, I think. But I don't think we're going to get a crash, particularly now. I think we've gone through the sort of the worst, and the interest rates are going to come down relatively quickly. The economy is moving out of recession. Real wages growth is positive. So all of those factors would suggest to me that we're going to see reasonable performance of property, but we haven't had that massive hike that we saw in Australia over the last few years. It's gone up quite a lot, but not as much as in Australia.
Martin, just on the building side in the UK, obviously in Australia, building costs, getting access to labour prices going up, construction companies going under, etc., capacity getting taken from governments and corporations and etc. So it's a real tough time, right? Like, I really do feel for developers and builders and that industry. And yeah, okay, let's build 1 million plus homes in Australia. And what's the take in the UK? Like that number is, in Australia, it's completely unfeasible, right? Like, it's just not going to happen unless prices go up a lot. And you can't see that in this market happening with borrowing capacity so tight. So what's the score in the UK? Is that achievable? Have they got the capacity, and, have they got the buyers that can actually go and buy those properties?
So roughly last year, they built 300,000 properties.
Okay.
They're now moving up to 375,000 per year. So it feels to me that this is quite doable, although we do have some of the same pressures on building firms. So we have had bankruptcies. We have seen the costs of the supply of materials rising quite considerably, but interestingly, more of the raw materials are actually manufactured at home rather than actually being brought in from China. And I think that's probably putting a little bit of a control on what the building costs are. We don't have enough skilled builders. A lot of the people from Europe went back when Brexit happened. So there's a little bit of a question, because we had a lot of Polish builders were actually quite a thing for a few years. They've gone away a little bit. So there is issue about supply of labour, but it doesn't feel to me to be so outlandish relative to what Albo wants.
Martin, can you finish with the property dumbo? I'm sure you got plenty of those always popping up on your plate.
Well, it's quite interesting. This is a UK one, which
even better.
Yeah. So I was talking to someone the other day. Actually, I'm down in Bath in southwestern England, right, which is a really interesting area because, of course, got all the history. And they've just bought a house. It's a 1930s semi-detached, so pre-war, 2 up, 2 down, bay window at the front, a long garden at the back. But they didn't do something which they should have, which was to look at the survey in a bit more detail, because they were buying in an area of Bath where there's been a lot of quarrying over the years. Now, when I say quarrying, this is underground quarrying of Bath stone. It's this honey-coloured stone that a lot of the property is built with. And they've now discovered that they've got this big hole under their property. And the reason they found it was because they were looking at a small hole in the back garden. When it was raining, water was running down off the roof and then disappearing down this hole. And they thought maybe this hole was actually going into the plumbing system. But no, it was just going into the underground hole.
Wow.
And they've now discovered that they have got, just a big hole under their property. And the survey that they had specifically excluded anything to do with underground quarrying.
God.
So this is a classic example of when you see an exclusion in a survey.
Ding! Why is that an exclusion?
Why would they be saying that? Go and look at the local maps show quite clearly where those quarries are. And in fact, just down the road, they've spent a multi-million-dollar project backfilling a lot of properties with concrete to be able to actually make them secure, because it's a really big issue. I mean, you can walk along some of the streets and you can hear the feet echoing. So the object lesson here is, when you buy a property, get a survey. When you get the survey, read the exclusions and the small print, because quite often it's not just standard, everybody says that every time. Sometimes there's a reason why a surveyor would say, well, I'm not going to cover that because there's possibly liability that I don't want to cover. So it's really important.
In the UK, they call it a building and pest inspection, a survey, right? So that's what you're talking about. And most wouldn't look in the geology. Most wouldn't look under the ground, but
Yep.
there are there are areas in Australia that are subsidence areas where there's been mining, and so that comes into local due diligence, and usually depending on which state you're in, whether that has to be disclosed or not, but often the zoning certificate would include information about that. So this is all discoverable stuff, if only you know what you need to discover. So it's the local knowledge bit, because you think, okay, I'm going to have this checklist of all things you need to do when you do your due diligence on a property. But if you don't know that area, you don't know that there's, basically gaping holes underneath the ground where they've been digging out rock. And so you wouldn't even think to check that. So it's a classic mistake. It's so discoverable, and yet it's so easy to do.
And interestingly, one of the observations there was that you would have expected the lawyer who was actually involved in the transaction to have done a little bit of digging around.
But only if the lawyer is a property specialist.
Exactly. And that was the problem. They actually used one of these cheap conveyancers, £200 or whatever it was to do the transaction. So they did no checks on the underlying structure. So whenever I look at a property for anybody, I say, understand the development plan, understand the geology, understand the planning regs, flooding, fire, all of those things. You've got to do that stuff. And if you don't do it yourself, make sure that there's a checklist somewhere, and somewhere in that process, you get those done as part of the due diligence, because the point is this: you can save a few pounds or dollars on the way in, but you'll lose thousands and thousands if there are issues. And so many times people have got burnt subsequent because they didn't do the work on the way in. And I in headlights, I always say, do your due diligence and do it properly, because the risks are huge. I mean, this is a massive investment you're making, and the decisions you take today echo down the years. So this is really important.
Absolutely.
Thank you, Martin. It's been such a good chat. I hope you're enjoying the summer in the UK. It's freezing in Australia right now. We've both got our woolly jumpers on, so wouldn't mind being over there right now. Yeah, 2 heaters on in this room. So thank you, Martin. You're not missing much in Australia in winter, but I hope you're enjoying the European summer. Yeah,
it's 30 degrees today. We had blue sky yesterday, so we had, for a week or two. We'll enjoy
this is your week of summer. Enjoy it.
Yeah, exactly. Enjoy it well.
Thanks. Very, very good to catch up again. And, interesting parallels, interesting observations. I hope that's been helpful.
No, it's great, and really appreciate that, Martin. It's always good to chat. If you have a question that you'd like us to answer in an upcoming Q&A episode, you can send us a voicemail or written question via the website, theelephantintheroom.com.au, or you can email us directly at questions@theelephantintheroom.com.au. If you like what you're hearing, please share this episode with others you feel would benefit. And while you're at it, why not leave us an iTunes review? 5 stars would be great. I know that sounds a bit cringy, but we have it on good authority that every review helps make it easier for other people to find out about us and hear what our amazing guests have to say.